All right, guys. I think this is fine. Ready? How are you, Nana? Fine, fine, fine. Doing great. Various reasons, Nana. We'll we'll discuss it off the class, off camera, yeah, of course. Okay, so after a decent gap, so we're gonna continue with our overheads. Okay, chalo. Anyways, first of all, to continue, how much of the overheads concept you guys remember? Overhead, eh? Very good, fantastic. All right, we'll see that. That's not an issue, right? Anyways, I think this is the last sum that we have done, isn't it? Illustration 10. Check that once. At least we have notebook, or it's not given for any samosa shop, right? Okay, okay. Huh? He would have given it for biryani shop, right? Anyways, all right. So it's there with you still. Okay, that's good. All right. Chalo. Then the thing is, we'll revise the concepts once, not the entire concept. Then again, session by session, it will go. Okay, we can't do that. So to the extent what is necessary for you to solve the further sums, we'll revise it. And after that, what we'll do, usually we'll, start solving the sums. Because I think with respect to illustrations, I think this is the last sum, if I'm not wrong. After that, we have questions, right? We'll go for MCQs first. After that, we'll go for the other, problems. Then after that, we'll have a case scenario at last. With that, we'll be finishing off this chapter. Once this chapter is done, the next chapter that we'll be starting will be ABC, activity-based costing. Okay, right? Because that is connected to this one. That's why we're gonna go for that chapter. Activity-based costing is nothing but extension of your overheads chapter. Okay, so therefore, that will be our next chapter. Anyways, ready? Yeah? Okay, so what's the chapter name first of all? Remokku fellows. Overheads. Anyways, chalo. So what is the chapter name? Overheads. All right. Now, tell me first question. What is the purpose of this chapter? To calculate overhead cost per unit. Correct? Isn't it? Because we know that total cost is made up of two different types of cost. What are they? Direct cost and indirect cost. Correct? Now, when it comes to direct cost, immediately we know what is direct cost per unit. So we know this straight away, right? But with respect to indirect cost, we do not know what is indirect cost per unit, correct? That's why it is called indirect cost, because of that very reason, isn't it? Right? So therefore, if at all I have to do business, I need to fix my selling price. If I need to fix my selling price, I should be knowing my total cost, because only cost plus markup I can fix my selling price, correct? Right? So unless I know total cost, I cannot fix my selling price, correct? So therefore, I should know total cost per unit. But to know total cost per unit, what is the problem over here? I should know direct cost per unit as well as indirect cost per unit, correct? Direct cost per unit, no problem. Why? Because the moment the cost is incurred, I know what is per unit cost, correct? But when it comes to indirect cost, I don't know what is the per unit cost. So what I have to do? I need to see, the concept here is you can't find indirect cost per unit immediately. But is it impossible to find? No, you can find at the end of the day. But it's a tedious process. It's a long process. It's a long shot. After that, you'll be able to find indirect cost per unit. Are you able to get me? So therefore, to do this, we study a chapter called overheads, where the ultimate purpose is to find indirect cost per unit, which is nothing but overheads per unit, because the other name for indirect cost is what? Overheads, correct? What is the other name for this? Overheads. What is the other name for this? Prime cost. Okay, you should remember all this. Okay, anyways, because of a little bit of gap, chalta hai, even if you forget, that's excusable. You're excused. But then that excuse will be there for another 1 week until my birthday, otherwise. Okay? Uh, Wait. After that, no excuse. Because I'm taking a lot of decisions on that day. Resolutions. Very strong. Okay? Right. Anyways. So the point is, so till that time, you have enough time for you. So what you have to do? Revise. So far, that is the reason your accounts sir and me, we have taken a decision. Okay? So that you should not be bombarded with multiple subjects at a time. So that you'll eventually get what? Confused, and you can't concentrate on one single subject. You got the point? Carry? Right. So, and accordingly, a decision has been taken, and eventually it was done like that. But what I'm trying to tell you right now is that, no, that is done. ठीक है, वो तो हो गया. Gatam gataha. Now, we need to look into our future, and that's going to be completely about our subject, which is costing. You get the point? Yes? So, you take 1 week of time, slowly, every single day. Try to what? The first thing that we have to do is that, anyway, now I'm going to revise this. This is not required. But the other chapters you have to revise, especially the basics. Basics chapter, you revise one more time, so that it will be easy for you to follow rest of the chapters. Is that clear? You get it? See, you need to understand that this is considered still as the toughest, subject in your entire CA Inter. Even today. You understand the point? There are various reasons for that. Two major reasons is, first of all, this is absolutely strange subject, right? Rest of the subjects you are already in touch in your CA foundation, isn't it? It's just a continuation of your CA foundation, right? Whether it is law or it is what? Your accounts and stuff like that. Taxes, by default, it is interesting. So therefore, you'll be somehow connected to that, because we'll be hearing about it in budget, in TVs and stuff like that. So it's a subject that we are in touch, right? This is total stranger. So that's why it's very difficult for you to what? Digest it. That's one reason. Second reason is the syllabus is pretty strong. It's a pretty good syllabus. I mean to say lengthy. At the same time, the subject is an open subject. When I say open subject, I told you at the beginning itself. This is not like your law or taxes where somebody has put some rules and then you have to follow that rules blindly. You need not think anything beyond that. Just follow the rules, your job is done. You got it? Accounts is pretty much the format most of the time, right? This is not like that. Here there are no rules. There is no law. So it's an open subject, right? So that's where you have to use your brain freely, right? That's what it becomes challenging. At the same time, somebody who can really love thinking and who loves to play Sudoku and stuff like that, for them it will be very easy also. You got it? And interesting at the same time. So it's all about your choice. You get it? So therefore, I'll give you that time. Meanwhile, try to revise it and focus on this particular subject, and let's finish it off. Because if you can do that, scoring 70 plus, 80 plus is not a difficult task with respect to this particular subject. You get it? Particularly the way we are covering, because we aren't leaving anything, isn't it? We are covering the theory, we are covering the concepts, we are solving each and every sum given by your ICA, and that too we are doing it in a conceptual way. Beyond that, as a human being, we can't do anything. You get it? Once your batch is about to get finished, at last we'll be covering MTPs and RTPs, if that comes, because it has to be released by your ICA. You got the point? And it will come to you only. In your students forum, it will come. It won't be visible for us also. And from that, we'll download it and then we'll solve that as well. That is at the end of your class. You get it? End of your class means the whole session I'm talking about, You get it? Yes? So focus and try to be in a positive state of mind. Okay? Don't worry. Yeah, gap ho gaya to ho gaya. ठीक है, चलता है. Now let's move on. Got it? We can't change that. You get it? Right, fantastic. So now we know the purpose of this chapter. What is the purpose? To find out overhead cost per unit. Now, the biggest question is, how are we going to find this? You guys remember anything? So, we have 3 steps to find that. Correct? The first step will be what we have to do. We need to budget your overheads. Correct? Nana? We have already discussed the concept of absorption in your marginal costing chapter itself, isn't it? Right? And I told you the logic behind that as well, right? So you know that you don't know your actual overheads at the beginning of the year. You know it only at the end of the year. So the first step is to budget your overheads. We do that, right? Hello? Next, what we'll do, we'll identify the departments in your factory. departments. How many departments are there in your factory? Predominantly, they'll be classified into two. One is production departments. The other one is what? Service departments. Correct? This will do, right? Okay. Production departments, what they'll do? They'll directly be involved in producing the finished goods. Service departments, what they will do? They will not be producing any finished goods. Rather, they will be assisting the production departments. Correct? Like, for example, canteen department, they don't produce anything, but they provide food to all the people, isn't it? Maintenance department, they don't produce anything, but they assist the production department in maintaining their machines. Correct? Repairs department, they don't produce anything, but they do the repairs for all the production department machines. Correct? Yes. Right. So we'll identify the departments. Let's say there are 3 production departments and 2 service departments at the end of the day. Okay. This we will do. After doing this, what we'll do, we have already budgeted the overheads, correct? Right? And we have also identified all the departments. Next, what we'll do, we will do something called cost allocation. What is the word? Cost allocation. Allocation means what? We'll find a particular cost. See, overhead is not a single cost, correct? Is overhead as a single cost, or it's a pool of multiple expenses? It's a pool of so many expenses, correct? Right? Inside overheads, there are so many items, correct? Say, for example, you have inspection cost, okay? Yes, everybody, you have maintenance cost. You have so many costs inside the overheads, okay? So therefore, what we'll do, we'll take each and every cost and we'll see if that particular cost is incurred by a particular department. Are you able to get me? For example, let's say there is something called inspection cost. Out of these departments, there is, say, for example, service department S2, which does only inspection job. It does not do anything else. Let's say, we're just imagining. Are you able to get me? Then what we'll do, straight away, we'll take this inspection cost and we'll put it in service department 2. That's all. We will not give anything here. 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 You get the point? So this process, we call it as what? Allocation. Allocation means taking up a cost and giving it to only one department. Whichever department is responsible for incurring that particular cost. Got it? Yes? Okay. After cost allocation, what is the next step that we'll do? Cost apportionment. Okay. What is the next step that we'll do? Cost apportionment. Apportionment means what? Now, all these costs which are specific to a particular department is already given to that particular department. You understand the point? That is allocation. That process is done. Now what we'll do, now we will have some cost which is incurred by all the departments. For example, lighting cost. Okay. Now lighting cost means whichever department has got light points would have incurred that particular cost, isn't it? So now what we'll do, we'll take the lighting cost. Let's say it is 1 lakh. We'll take that lighting cost and we'll find a suitable basis. What is the word? A suitable basis. For example, all these 5 departments are reason why you have incurred a lighting cost of 1 lakh. Because all the 5 departments has used electricity. All the 5 departments has got number of light points, correct? So now what I'll do, I'll find a suitable basis. What is a suitable basis in this case? Light points. Yeah. It could be anything else as well, but right now let's say it is number of light points. So what we'll do, on the basis of number of light points, this 1 lakh will be apportioned to P1, P2, P3, S1, S2. So this we call it as what? Apportionment. To be even precise, this step will be called as PD. What is PD? Primary distribution. What is PD? Primary distribution. What we are doing is apportionment only, but to be very specific, we call it as primary distribution. So which means basically what is happening is we are taking a particular cost. We are trying to figure out a reason why that particular cost is incurred. And we know that all the departments are benefited from this particular cost. Therefore, because they are benefited, it should be given back to them. So we are giving it back. Got the point? Bol rahe, everybody? Clear? Right. Now, once this particular step is done, which is primary distribution, what has happened? We have 3 production departments. We have 2 service departments. Now, after primary distribution, this is how it looks like. which means all your costs are present right now in the respective departments, correct? Right? Some amount is there here, some amount, some amount, some amount, some amount. Like this, we have so many other overhead costs as well. Everything will be apportioned like this only. Got the point? So after PD, your overheads will be apportioned to all the departments, both production as well as service departments, and they are like this. After this, what is the next step that we'll do? Yeah, we will do something called reapportionment, or we can also call it as what, Nana? Secondary distribution. So during this step, what we'll do? We will be taking this service department overheads, and that will be reapportioned back to what? Production departments on a suitable basis. For that, we have so many methods, correct? Right? Then what will happen? That methods we'll see later. Then what will happen? After secondary distribution, all your overheads will be inside production departments, correct? Now what I'll do? Now again, I'll find a suitable basis, predominant influencing factor. We have 6 different methods that we'll see later. Let's say it is units. So what we'll do? We'll divide it with units. Then eventually I'll be getting what, Nana? Overhead cost per unit, which is what my target is here, correct? Isn't it? Right? And my job is done. So this is the basic idea of what we have done so far in your overheads chapter. But of course, if we dig deep, then what happens is, with respect to this particular step, that is reapportionment or secondary distribution, we have so many methods. We have direct distribution method, we have step ladder method, and we have reciprocal services method. Under reciprocal services, we have what, Nana? Simultaneous equations method. We have a redistribution method, trial and error method. You got it? Don't worry that once we start solving, you'll be able to get it, right? Now, we'll just have a look into those methods one time, okay? I want you guys to focus. Okay, wow. Kya re? Right, so we don't have enough time. So what we'll do, fat, I'll revise. Focus, Mukophilus. Right? Where are we right now? Don't give Mokku jokes saying in class and all that. Where are we right now? We are discussing secondary distribution of overheads, correct? Under secondary distribution of overheads, what we'll be doing? We'll be redistributing the overhead cost to what? To what, Ray? To production departments. Very good. Correct? For that, we have multiple methods, correct? Now we're gonna see those methods. Right. Okay. So what are the methods we have? Yeah, we have what, Nana? Direct distribution method. Then we have step ladder method. Then we have reciprocal services method. Basically 3. So in direct distribution method, what happens? We will take the service department overheads and then we will distribute them to what? Production departments. That's it. Are you able to understand? Which means there is no question of one service department giving service to another service department. That will be completely ignored. Are you able to understand? See, here you need to understand few things when we are solving sums. When it comes to direct distribution method, we know that service department overheads will be directly distributed to production departments. That's fine. But when we are solving sums, sometimes when data is not given, what do you mean by data not given? One service department overhead providing service to another service department overhead, data will not be given. When it is not given, it's crystal clear that you have to solve it under this method only. Sometimes data will be given in the question, but the question will specifically ask you to do it as per direct distribution method. Then what you have to do, ignore the data and then solve it as if the data is not given in the question. You get it? Right. Now coming on to step ladder method. Here what happens, I told you it's a one-way traffic. One-way traffic means either a service department will give service to another service department or it will take service from another service department. Only one will happen, 2 will not happen. So it's not like a two-way traffic. Correct? Under this method, we will completely ignore one service department providing service to another service department. Under this method, we will consider only one side. Means, say for example, there are 3 service departments like A, B, C. A has given service to B, A has given service to C. Which means now what has happened? The road is closed for A. Why road is closed for A? Because A has given service to both B and C. So it is like one-way traffic. You have given service now, so it's game over for you. That's it, done. You get it? Now coming on to B. B has already taken service from A, so that road is also blocked. What is the only road that is left over? B giving service to C. That road is empty. Now what about C? It has taken service from A, so that road is also blocked. It has taken service from B also, that road is also blocked. So C can't do anything. It can do one thing. It can give service to production departments. Are you able to understand what I'm trying to say? It's very simple. So that's why I told you all this small tricks. So keep that in mind so that it will be easy for you to recollect. What did I tell you? It's like a one-way traffic. Either you can receive service or you can give service. Okay? Either you give or you take. Only one. You have already given, then you can't take. You have already taken, then you can't give. Is that clear? Right? But when it comes to this particular method, it's very easy. Why? Because in question itself, he'll give you the data. He'll give you data in such a way only. For one department, for one service department, he'll give data such that it provides service to all the other departments as well. For rest of the departments, he'll not give sufficient data. From that only we can understand. Or sometimes what will happen, entire data will be given for all the three. Which means if you read the question, it's as if reciprocal services are happening. Like A will give service, A will also take service. But still at the end of the question, he will say, do it as per step ladder method. Then we are confused. Then very simple, we need to understand the order of apportionment. Order means first I should start with which service department, next which service department, next which service department. That will also be given in the question. Question will say, go in this order. First A, next B, next C. What will do? Okay, question will say, and then we'll follow A, B, C. Then it's the matter. What if that is also not given? So which means question is silent. It did not give you order of apportionment data. Second, the data is given with respect to all the service departments. So which means you can also solve it as per reciprocal services method. You understand the point? Now you are confused because question has specifically asked you to do it as per step ladder, which means I need to follow step ladder, but data is wrong. What I have to do, very simple, go with the amount of overheads with respect to service departments. Suppose A's overheads is 1 lakh, B's overhead is 50,000, C's overhead is 20,000. Now what you'll do, you'll start with A because it has got highest amount of overheads. Then you will go for B, then you will go for C. Are you able to get me? So it's pretty simple. Just remember, usually when it comes to step ladder method, the order of apportionment is very important, which means first I should start with which service department, next which service department, next which service department. Are you able to understand? If it is given in the question, happy, follow the question. If it is not given in the question, look at the amounts. Whichever service department has got highest amount of overheads, we will start with that particular service department, followed by next highest amount, followed by next highest amount. Got the point? Everybody? Right. Then we have reciprocal services. This we know. Almost you guys got bored also last time, because here what will happen? We will give and take service. So we'll keep on distributing it again and again. Correct? You remember it? Right? So it means once there are two service departments, this will give 10% service, this will give 20% service. Then what we'll do? We'll keep on doing this again and again. We'll give 10%, we'll take 20%. Again, we'll give 10%, we'll take 20%. We'll give 10%, take 20%. Correct? Till the number becomes what? It's not nil, like non-materialistic, like 5 rupees, 10 rupees, 15 rupees, 20 rupees. It depends upon the question. Depends upon your ICA also. Sometimes he will say 100 rupees is also immaterial. Sometimes he will say 7 rupees is only immaterial. So it depends upon ICA also. What, Nana? So that's okay. Don't worry. Once we start solving sums, because anyway, we have to solve all the sums right now. Once we start solving sums, you'll get, automatically it will get refurbished. So that's not a problem. Kya right. So what is the first method, Ray? Direct distribution method. This ignores services from one service department to another service department. So totally forget about it. So it's a very easy method. In step ladder method, what happens? Considers one service department service to another service department and sequence is determined by maximum number of services, or if that details are not given in the question, then we will go with what, Nana? Large amount of cost. Correct? First large amount, next large amount, next large amount. Got it? Right. After that, we have reciprocal services, which are simultaneous equations, trial and error, and repeated redistribution method. Now this, I can't revise it right now because unless you have numbers, you can't get it. Because already we have solved all these illustrations in the earlier class. We have already done it. So it's not nothing new for us. We'll start solving sums right now. In that flow, you'll get it. So don't worry. You got it? I'll go a little bit slow. That should be fine. Kya are you able to get it? Everybody? Right. Then we have seen the concepts of absorption. Okay. In this, I've told you that there are 6 different methods of absorption. I don't know how far you remember this, but anyways, totally there are 6 different types of absorption. One is direct material, direct labor, prime cost, direct labor hours, direct machine hours, as well as units method. It's very easy for you to remember. Remember it this way. You have direct material, direct labor, then you have these two added together, which is nothing but prime cost. Okay. Then you have labor hours, machine hours, and units. You got it? Out of these 6, I told you which one is important. Machine hour rate is important. Labor hour rate is important. Are you able to get me? The rest of the things are not that important. I told you the reasons for that as well. Now, if I start explaining the reasons and all, then again, it will take another 1 or 2 classes. So we can't get into those details because already that session is done for us. Okay? If necessary, what I'll do, I'll ensure that the videos is available for you. You try to go through those videos, or otherwise I'll upload in YouTube channel. You watch it. Got it? Over its chapter, I'll upload. What is there? You watch it so that it will be, you will be able to what? Recollect. That should not be a problem. But right now, what you have to understand is when it comes to method of absorption, we have totally how many methods? 6 different methods. What are they? Direct material, direct labor, prime cost, machine hours, labor hours, and units. Important is labor hours and machine hours. Are you able to get me? Yes. Right. For that, we have seen all the reasons as well. Here I've explained you one by one, all the methods. Here it is, DM, direct material method, as well as prime method. Correct? I've explained you the reasons. Okay, then we have gone for direct labor method. Then we have seen labor hours method. Then we have seen machine hours method. Even under machine hours, we have also seen direct machine hour rate as well as comprehensive machine hour rate. Okay. Now, when it comes to the summary of all this that we have discussed, the summary is hours based methods are important when it comes to the other methods. What are the other methods we have got? Direct material, direct labor, prime cost, and units. These are not that important when compared to these, which are important: labor hours and machine hours. The reason why hours based method are important is because what we are observing right now is overheads. What are we observing? Overheads. The nature of overhead cost is such that it goes with your time. Overhead cost goes with your time. What do you mean by that, sir? More the time, more the overhead cost. Lesser the time, lesser will be the overhead cost. Are you able to understand? Yes. So therefore, when the nature of your cost is such that it goes along with the time, which means more the time, more the cost, then any method that is based on time will be the most suitable method. That is the logic. Are you able to understand? Out of the 6 methods that we have got, which are the methods where time is given importance? Only 2 methods. What are those 2 methods? Labor hours as well as machine hours. So basically, that is the preferential methods that we will go. You got the point? Because of giving importance to what, Nana? Time. Exactly. All those things we have already seen. Nothing new. I'm just giving you summary. Hello. Yes. Rest of the methods, whether it is direct material, direct labor, prime cost method, or units method, we don't give importance to time. Therefore, they are not that accurate. That is the logic. Are you able to get me? Everybody? Fantastic. Right. Chalo. That's what we have seen. And we have solved all these illustrations as well, 6 and 7. Then we went with the concept of absorption. This is nothing new. We have already seen in which chapter? Marginal costing chapter. Here also we have seen it again. Okay. I'll give you the summary. Don't worry. See here. Nana, this is very important. See here. No. What is this concept of absorption? I don't want to get into all the details, why there is concept of absorption and all that. I'll directly give you the gist. The gist is there are 3 types of overheads for you. Okay. Now look at how everything will work out. Your actual year will start from April 1st. Correct? Now come before that April 1st, in the months of Jan, Feb, and March. So what you will do before your financial year starts? You will do budget. Correct? Hello, Hessa, what? You will do budget before your financial year starts. So what I'll do is that I'll budget my overheads before my financial year starts. I will also budget my output before my financial year starts. And I will divide these two to find out a rate, which is nothing but absorption rates, or we can also call it as budgeted rate, or it is also called it as predetermined rate or recovery rate. So many names for that. But it's important to remember all the names, because one question he'll ask one name. One question he will say it is recovery rate. Another question he will say predetermined rate. Another question he will say absorption rate. Another question he'll say budgeted rate. Are you able to get me? Our ICA is like that, so we can't do anything. So therefore, it's important for us to remember all the names. Singing, eh? I hear some sort of singing is going on there. What singing? Chalo. Anyways, all right, that's okay. Anyways, now see, you got to concentrate, Ray. Otherwise, we can't start solving sums. I know it's gonna be heavy. That too, time is unfavorable. I know that. After lunch, I know the problem. That's why I did not have lunch. I had only tiffin. Straight away I've come to the class. You got it. What you guys have done? Full. All right. Take it. Where is that one ticket missing? What is doing? Shh. Now we'll speak facts. Huh? Off camera, right? Chalo. All right. Anyways. ठीक है. Now come back. So first we'll start calculating something called absorption rate before your financial year starts. Okay? Right? There are reasons for that which I've already explained. Now we can't go in detail through everything. Okay? Right? Anyways. After that, your actual financial year will start. So what I'll do, already I've calculated budgeted rate. I'll take that budgeted rate. I will see how many units are actually getting manufactured. I'll multiply. Say for example, on April 1st, I've manufactured 40 units. For each unit, how much I should observe? 10 rupees. So therefore, for 40 units, I'll be observing 400. Now, when I say observing 400, what does it mean? It means you have debited 400 in costing P&L account. That is the logic. Got it? Right. On second, I've manufactured 80 units. For each unit, how much I should observe? 10. So 800 observed. Third, 100 units. For each unit, how much I should observe? 10. How much is observed? 1000. Done. Like that, you will do it for the entire year for 365 days. After the year end, after the year completion, you have actually manufactured 13,000 units. For each unit, you should observe how much? 10 rupees. Therefore, totally you have observed how much of overheads? 1,30,000. Got it? Now, because we have come to year end, we know what our actual overheads are. At the year beginning, we don't know. Correct? Year beginning, we don't know what our actual overheads are. But at the year end, we know what is our actual overheads. Correct? And what is our actual overheads? 1,40,000, which means this is the correct figure. Correct? 1,40,000 should have been debited in costing P&L account, whereas you have debited how much? 1,30,000, which means you have debited more or debited less? Debited less. 1,30,000 is what you have debited. You should have debited how much? 1,40,000. Correct? Which means I have debited 10,000 less. 10,000 debited less is nothing but under absorption, which means you have observed less. Correct? You should have observed 1,40,000, whereas you have observed 1,30,000. You got it? So under absorption of how much? 10,000. Carry. Now, because you have under absorbed 10,000, which means you have under debited 10,000, it would have increased your profit or reduced your profit? This is an expense, na. You should have debited 1,40,000, but you have debited only 1,30,000, which means you have debited less, which means your profit would have got increased. Correct profit or wrong profit? To correct it, what I have to do? Decrease that profit. So which means your profit should be reduced by 10,000 to correct it. Got the point? Suppose I have observed 1,50,000 and your actual overheads are 1,40,000 at the year end. Now what you'll do? It means there is over absorption because I should have debited 1,40,000, whereas I've debited 1,50,000. I've debited 10,000 more. So my profit would have got reduced by 10,000. So to correct it, what I have to do? Add back 10,000. Are you able to get me? Right? Bol rahe na? And now comes the most important part. Now listen carefully. This is important for solving sums, which we are going to do right now. Listen. To find out this absorption rate, we have 6 different methods, which I've already discussed. To explain you the concept, I've chosen one method, that is units method. Therefore, I've divided this overheads with units and I've got rate per unit. Are you able to get me? Instead of units, it can be anything else as well. It can be labor hours, it can be machine hours, it can be prime cost, it can be labor cost, it can be material cost. Now, suppose it is not units, it is labor hours. Then how the scenario will change? Budgeted overheads divided by budgeted labor hours. You will be getting budgeted rate per labor hour. Okay? And then here budgeted rate per labor hour will be multiplied with actual labor hours. Will be multiplied with actual labor hours. And accordingly, rest of the process is same. Now let's change again. Now, suppose it is not labor hours, it is machine hours. What will happen here? Budgeted machine hours. What you will get here? Budgeted machine hour rate. Okay? You will take this and you will multiply with actual machine hours. And then you will be getting actual absorbed overheads. Are you able to get me? Then you will be comparing with actual overheads at the end. See, understand, this is total budget. This is total actual. There is no problem with respect to these two. This is khichdi. What do you mean by khichdi? Neither budget nor actual. It's a mix of both. You have 1,30,000 here, na? This 1,30,000 is a mix of both. 13,000 is actual figure. 10 rupees is budgeted figure. Correct? So it is half actual, half budget. You get it? Kya nana? This you have to keep in mind. Right? So observed or standard overheads is a mix of both budget as well as actuals. So it's a half. Got it? Keep that in mind. Right? Till this it's clear. Right? This is important for us to solve the sums. Kya right? Okay. One more point. See another. So we know that how to find under or over absorption. It is the difference between, listen. How to find under or over absorption? It is a difference between two things. What are they? Absorbed overheads and actual overheads. Actual overheads is very easy. It will be given in the question. Absorbed overheads is not easy. We need to calculate. How to calculate absorbed overheads? First of all, we need to be clear with the method. Suppose it's a units method. What we'll do? We'll take actual units. We'll multiply that with absorption rate. Now, how to calculate absorption rate? Budgeted overheads divided by budgeted output. Right? Now, let's talk about machine hours method. So what I should do? Budgeted overheads divided by budgeted machine hours will give me budgeted machine hour rate. Now take that budgeted machine hour rate, you multiply with actual machine hours, you'll be getting total absorbed overheads. Now compare this absorbed overheads with what, Nana? Actual overheads, you'll be getting under or over absorption. This you should be clear. This is very important. This is where your problems will be tested. Now we're going to solve the sums now, you'll understand. So first you need to understand, is there any under or over absorption of overheads? We know how to calculate. It is the difference between absorbed overheads as well as actual overheads, which we have seen here, correct? Once you are done with that, yes, there is under or over absorption, then you need to find whether that amount is small. Small means what? Non-materialistic. That is what the meaning is. Small. If you say yes, it is small, directly put it in costing P&L account, no discussion. Which means 100 rupees, 200 rupees. Again, materiality depends upon the company. For example, a company having a turnover or amounts of crores, even 1000 rupees also will be non-materialistic. You got the point? Suppose there is a company which is in lakhs, then probably 1000 rupees is material, 100 rupees is non-material. So it depends upon the question. So there is no hard and fast rule. You need to decide whether that amount is relatively small. The correct word here is what? Relatively small with respect to that particular company. अरे बोलना रे मोकू fellows. What are you discussing with cousin marriage? Huh? क्या रे मोकू? Focus. Focus is important. क्या रे? Yes. When you're eating biryani, will you not focus? You'll focus and you'll eat, na? Huh? Same thing here. Focus is the same, right? Extreme focus, because it's after lunch. I can understand the pain, right? Anyways, now see, amount is under or over absorption. If it is small, straight away it will go to costing P&L account. Suppose if it is not small, then you need to find out the reason behind that. If the reason is abnormal, abnormal means it will not happen again and again, then again it will go to costing P&L account. If the reason is normal, then same treatment that we have given for normal loss. You know the treatment for normal loss, what we'll do? We'll increase the cost of the finished goods. Normal loss will be absorbed by good units, just like branded clothing, correct? So if it is normal reason, it means it should be treated like a normal loss, which means it will be absorbed by good units. If it is abnormal, then it will be debited in costing P&L account. If it is non-materialistic, then also it will be debited in costing P&L account. Got the point? But as far as I'm concerned, I've seen all your sums. This never happened, which means there is no question where your overheads under or over absorbed is small. That situation I have not seen so far. So therefore, all I've seen is this one. What will happen is there will be under or over absorption. Let's say some 10,000 under or over absorption will be there. In your question, he will say 60% is due to abnormal reason. 40% is due to normal reason. This is how it will be given in your question. Okay, this is how. Then what I'll do, a 60% abnormal, straight away put it in costing P&L. 40% normal, good units will observe. Now the question is, if good units will observe means what good units? Whatever the good units that you have manufactured. Now you'll say, sir, I've manufactured 40,000 units, sir. In this 40,000, 30,000 is sold, sir. Are you able to understand? 10,000 is in stock, sir. Now what I should do? Even if it is sold means where it will be? In cost of sales it will be, correct? Take it to cost of sales. 10,000 units is unsold, where it is in finished goods, then take it to finished goods. So we will not leave any one unit also, even if it is sold. Are you able to understand? But here the trickiness is many students get confused here, because your ICA, what he will do is, if it is sold means, what did I say? It will be there in cost of sales. So you will be taking it to cost of sales, correct? Now where your cost of sales will be? In costing P&L account. Once you have sold, your sales will be on the credit side of costing P&L account. Your cost of sales will be on the debit side of costing P&L account. So it will be there in costing P&L account only. So here student get confused thinking that, sir, it is normal reason, sir. Despite that, he is taking to costing P&L account. He is not taking to costing P&L account actually. He is taking it to what? Cost of sales, and that is there in costing P&L account. Are you able to get me? Even some of the faculties also, they don't have clarity with respect to this one. They teach it in a wrong way, saying that it should be taken to what? Costing P&L account because it is sold. That's not the point over here. You get it? So when the reason is normal, it should be absorbed by good units. Now the next question is, where are your good units? So some are there in stock, some are sold. Doesn't matter. Give it to them. Irrespective of whether they are sold or whether they are in your stock lying unsold. That is secondary for me. Ultimately, whatever the unit that you have manufactured should absorb this normal reason. You got it? Should absorb this normal reason behind under or over absorption. You got the point? Kya re? Everybody, right? This you should remember. Anyways, okay. How will you observe? By calculating something called supplementary rate. What is supplementary rate? Very simple. How much you are under or over absorption, you take that, divided with units produced. See the word here? This is the keyword. The moment you see this formula, you should understand the logic. What is the denominator here? Units produced. It is not saying units in stock. It is not saying units sold. What it is saying? How much you have produced, to that extent you should observe. That's all. Are you able to get me? Sir, out of 40,000, 30,000 sold means okay, it is sold. 40,000 produced, na? That is only matters to me. That's all that matters. 40,000 is produced, sir. 30,000 is sold, sir. It's okay. Where is the cost, sir? Sir, in cost of sales, sir. Then you give it to cost of sales. Sir, my cost of sales is in costing P&L account, sir. Then give it to costing P&L account. Debit, that's all. Got the point? Sir, 10,000 is in my closing stock, sir. Then give it to closing stock. Then it will be treated as an inventory, like a current asset, carried forward to next year. Your current asset value will increase. You got it? One more problem also can come. Sir, 10,000 units are there, sir, but it is work in progress. Neither it is finished goods, nor it is raw material. Now what you will do? Very simple. Convert them to equivalent units. How much work in progress is complete? Sir, 50% complete, sir. What you will do? What you will do? 10,000 units, 50% complete is equal to 5,000 units, 100% complete. You got it? 5,000 units, give it. That's all. There ends the matter. So 10,000 WIP 50% complete will be treated as 5,000 100% complete. You get the point? Job done. You got it? This is important because we have so many problems based on this. You got it? This is important. Get it? Right. Fantastic. Forget about all these things that we'll see later. I have taught everything. Whatever that is given here, I've already taught you. Got it? Hello? Right. Okay. Chalo. I think that's all that is necessary for us to solve the sums. Whatever that is necessary, I've revised. Rest of the things we'll see later. Yeah. One more thing. This one you have to remember. We have problems on this. What is this, Nana? Concepts related to capacity. I think what was the last sum that we have done? Illustration 10. Huh? That means all these things we have covered. Right, Nana? Remoku fellows. Yeah. Chalo. Anyways, we'll see this one more time. Now see here. Let's revise this one more time. What is this? Concepts related to capacity. Ready? Yeah? Now, listen carefully, Nana. What are the different capacities we have? Installed capacity. Then we have something called what, Nana? Practical capacity. Then we have something called normal capacity, actual capacity, and ideal capacity. Now, before I go with this, you guys, once you confirm till where we have seen the concepts, I think till here only I think so. This is where illustration 10 is solved. Right? No. I remember. Illustration 10 is here, which means till here we have covered. Right? Chalo. Which means this anyway we have to discuss. Now let's discuss this, finish it off, and then we'll go for solving sums. Ready? Yeah? Ready? Chalo now. So we have something called concepts related to what, Nana? Capacity. This is important for us because based on this we have sums. And even MCQs also will be asked. So I want you guys to focus here. Ready? Yeah? Now. So we have different types of capacity over here. First one is what, Nana? Installed or rated capacity. Now when I say installed, it means it's a maximum. For example, let's say you equate this to mileage of a bike. Okay? Once you buy a bike, let's say Honda Activa you're buying, what he will say, sir, company claimed mileage is 50 kmpl, sir, he will say. What do you mean by company claimed mileage? Practically impossible to achieve. That is the logic, na? Can you achieve whatever company claims? Impossible, because he will say, sir, you drive at 45 kilometers per hour, sir. Like that only you should go, sir. You go, sir, you keep on going, sir. Of course, that is on a road without undulations, without potholes, without speed breakers and stuff like that. Practically, will it happen like that? It's impossible, right? Similarly, there is something called installed or rated capacity. We call it as maximum capacity, or we will also call it as theoretical capacity. Now, practically, it is impossible to achieve that particular capacity. You got the point? So it is just on paper. What do we call? Just on paper. That is why we have something called what, Nana? Practical capacity. Practical capacity means from this installed or theoretical capacity, you remove all the, what do you call? Like, for example, in case of mileage, what did I say? You remove all the things that will happen, because we'll raise it to 60, 70, then we'll keep it down to what, 10 or 20, then we'll stop it because of a speed breaker, then we'll stop it because of a pothole. You understand the point? If you take all these things away, then automatically the 50 kmpl, which is company rated, will come down to what, 40 or 35. You get it? Hello? Yes. So this is like, to understand the concept only, I'm telling you, okay? This is like 50 kilometers per liter. Okay? Your Activa. This is like 40 kilometers per liter in case of your Activa, which means in normal scenarios, it is achievable. In the sense, it should be, you should be able to achieve it, given the normal road conditions and challenges. That is what we call it as practical capacity, which means that is the net capacity, available capacity, achievable capacity. You got it? Besides these two, there is something called normal capacity. This is the reality. What do you mean by that? It means, sir, the first one is absolutely impossible to achieve, sir. Okay, sir. From that, you remove all the abnormalities, you will get something called practical capacity, which is achievable. Despite that, you can't achieve it. What do you mean by that? Suddenly, traffic might be high that particular day, or suddenly some road work will be going on, or suddenly workers will be at strike, or suddenly something else will happen, and that will lead to something called what, Nana? Normal capacity. Are you able to understand? In other words, what I'm talking about normal capacity is, if you look at last 12 months or last 6 months in your company, in 6 months, first month so many units are produced, second month so many units are produced, third month so many units are produced, fourth month so many units are produced, fifth month so many units are produced. Okay, all these things, if you average, you'll get your normal capacity. Got the point? Hello? Now listen carefully, this is important. Let's say I'll put some numbers over here, then I'll erase it off. First month, second month, third month, fourth month, fifth month, sixth month. Okay? Let's say 10,000 units first month, 12,000 units second month, 11,000 third. Okay? Fourth, say for example, again 10,000. Fifth, 13,000. Sixth, 9,500. You got it? And you take the average of it, you'll get something called normal capacity, which is production achievable. But in this particular month, let's say 7th month, my production that I've achieved is 8,000. What is this called? Actual capacity. Are you able to understand? Next month, it can be again some 11,000. That is actual capacity. Next month, again, it can be 10,000. Next month, it can be 11,000. All these, with respect to individual months, what are they? Actual capacity. You understand the point? Take 6 months or 7 months or 8 months or 10 months or 12 months average, and that becomes your normal capacity. Are you able to get me? Everybody, right? Yes, right. And then obviously you'll have something called idle capacity. Idle capacity means what? The capacity to that extent you haven't utilized. Now the question is, next I'll ask you, say for example, our capacity is 50,000. Your actual capacity, what you have utilized, is only 30,000. I say, what happened to 20,000? You will say, sir, ideal capacity, sir. Then I say, why there is ideal capacity of 20,000? Then you will start giving me reasons. Correct? In that, there can be two reasons. One is unavoidable reason. The other one is avoidable reason. If it is unavoidable reason, it means what? Anyway, that is practically impossible. Unavoidable means you can't avoid it. Correct? So therefore, what did I write here? Cost or charge to production and capacity utilized. This we'll see later once we start solving sums. Right now, don't get confused. Avoidable reason means that is your mistake. Therefore, it should be charged to costing P&L account. Are you able to get me? Avoidable reason means this is your mistake. Your mistake. So therefore, that should be charged to costing P&L account. Unavoidable reason means this is not your mistake. You can't do this. Are you able to understand? For example, let's say, see here. Difference between this and this, these two. Okay? Let's say installed capacity is 50,000 units. Let's say normal capacity is 30,000 units. I already told you what is normal capacity. What is normal capacity? Last 6 months, in reality, what you have done, average of that is normal capacity. Correct? Right? Now, difference between these two is 20,000 is ideal capacity. Correct only, na? Ideal capacity. Now tell me, this ideal capacity is there, na? Is it due to avoidable reason or unavoidable reason? Common sense you can use, you can get the answer. It should be unavoidable reason. It can't be avoidable. It should be unavoidable because avoidable means it's a personal mistake. Personal mistake will not happen over a period of 6 months. It will happen in 1 month. It will happen at a particular point of time. It can't happen over a period of point of time. You got the point? Over a period of time, it will not happen. Any abnormalities will happen rarely, once a month. Or in one particular month, it will happen. It will not happen 6 months put together. Every month, it will not happen. Every month, if it happens, then it is not abnormal reason. It is normal reason. Get the point? So use your common sense, you'll get the answer. Which means the difference between installed or rated capacity or maximum capacity or theoretical capacity and normal capacity should be a normal reason. Therefore, the ideal capacity will be called as normal ideal capacity. That's what I've written here. What did I call? Normal ideal capacity. You get it? Everybody? You understand what I'm trying to say? Again, I repeat. Installed or rated capacity is what, Nana? Theoretical. Anyway, that is not possible. Normal capacity is what has actually been achieved in real life. Yeah, exactly. Are you able to understand? Right? Therefore, the difference between these two has to be normal ideal capacity. But then, see here. What is the average of this? Can you please tell me? 10, 12, 11, 10, 13, 9, 5. You total this up, divide it with 6 and tell me how much it comes. Average of this. Total this up, get the average and tell me the number. 10,000, 12,000, 11,000, 10,000, 13,000, 9,500 divided by 6. 10,960. This is our normal capacity. 916. Okay. This is our normal capacity, which means this is what you are actually achieved. Now let's say last 6 months, this month. Okay. 10,000 is what you have achieved this month. What is this 10,000 called? Actual capacity that you have achieved this month. What is the normal capacity based on the past of your company? 10,916. Now again the difference between this 10,916 and 10,000, which is 916 units, is again ideal capacity, correct? Now tell me, what is this ideal capacity? Abnormal, because it is avoidable, correct? It is avoidable. It's some sort of mistake you should have done. Otherwise, you should be able to achieve 10,916. Are you able to get me? So that is why difference between installed and normal is what, Nana? Normal ideal capacity. Difference between normal and actual, this is normal, this is actual, which we call it as what? Abnormal ideal capacity. Remember, abnormal ideal capacity is nothing but avoidable reason. Normal ideal capacity is nothing but unavoidable reason. When you can't avoid it, then only it becomes normal. When you can avoid it, it becomes abnormal, logical. Isn't it? Everybody. You get it? Now this concept is clear. This is very important for us once we start solving sums. Clear? Now again remember, okay, first there will be something called rated capacity on the product. It will be printed. That we call it as installed capacity, maximum capacity, theoretical capacity. Okay, from that you reduce idle time. I mean, I'm talking about whatever the repairs that will happen, schedule that, this, everything you remove that, which means all the impractical things once you remove, we call it as practical capacity. Again, practical capacity also to some extent it is like theoretical only, but it is achievable theoretical capacity. It's like that. Are you able to understand? That's why it is called, what do we call this? operating capacity, net capacity, available capacity. See, achieving this impossible. Achieving this possible. But still it is very difficult to achieve. When you ask me a question, sir, it is impossible to get practical capacity achieved. No, you can achieve it. It's like, let's say in your costing, last 10 years, nobody has got 100 out of 100. Then getting 100 out of 100 is your installed capacity. It's impossible to get. Are you able to understand? But in rare case scenarios, listen carefully, rare case scenarios, few people have got 98, then that is your practical capacity. But normally, people get around 70, that's your normal capacity. Are you able to get me? But today you have got 60, then that is your actual capacity. That's how you have to understand the difference. You get it? You get it? What I'm trying to say? That's why. So you should not get confused. So because students, where they get confused between practical and normal. Because they think practical is nothing but normal. Sir, no. Practical is not normal. Practical is not normal. Practical is what you can achieve when you do best of the best in everything. Doing best of the best in everything itself is very difficult. It can be achieved, but rarely it will happen. Are you able to get me? Normal is nothing but what a human being can do. He will concentrate for some time. After that, he can't concentrate. Today, 8 hours he has worked with one particular efficiency. Tomorrow, you can't expect same efficiency. Nah? He's a human being. Today, you will listen 2 hours of my class, Nana, with a particular concentration levels, and there is something that has happened. You have observed some knowledge. Tomorrow also exactly you will do the same. Huh? No. You may be worst when compared to today. The next day you may be best when compared to today. Correct? Huh? Today maybe out of 2 hours or 3 hours you would have listened for 90% of the time. Tomorrow 80% of the time you listen. Day after tomorrow 95% of the time you listen. You understand the point? So what you actually do is nothing but normal. That's why I gave you this example to understand what is normal capacity. The moment I talk about normal capacity, you should remember this example. And then you should remember this month example as actual capacity. Then the doubt will be gone. You get it? Everybody? Okay, so remember, installed capacity is like 100 marks, which nobody has achieved ever. And it is impossible to achieve. Practical capacity is like 98 marks, which you can achieve, provided everything should happen in a best way possible. You understand what I'm trying to say? Current should be in a best way possible. Machine should operate at best way possible. Labor should operate at best way possible. Supervisor should operate at best way possible. If suppose 8 hours is your time, exactly labor should come at 9 and he should leave after 8 hours. So everything happens in the best of the best way possible, then this is possible. Which in reality, is it possible? No. Therefore, it comes something called normal capacity. Which, taking all the inefficiencies into consideration, this is what happens. Because of these, we have all these numbers. Are you able to get me? Yes. So this is what is expected to achieve. That's why the word is production achievable. This is the reality. If that reality is also not achieved, then that is abnormal thing, which means it's a mistake. It is avoidable. Got the point? Everybody, right? Chalo. Now, summary is, tell me, how many types of capacities we have? Theoretical? Yeah, theoretical. Then we have practical, then we have normal, then we have actual. Now remember, actual can be sometimes greater than normal also. We have taken only the negative side here. I have taken only the negative side. What do you mean by negative side? That your actual is less than normal. In this example, normal is 10,916. I have taken actual being less than 10,916 as 10,000 only to explain this abnormal ideal capacity. It can be 11,000 also. Are you able to understand? Actual can be greater than normal also. It is possible. You get it? In this example, I have taken actual as less than normal only to explain this abnormal ideal capacity. Got the point? So keep that in mind. Are we done? All right. Chalo. Now we have some miscellaneous. Once we are done with this miscellaneous, this chapter is done. Okay, concepts part. Then we'll go and start solving sums. Now come to the miscellaneous part. Ready? Yeah? Anyways, now before we get to that, now tell me. How many types of capacities? First, give me the names. First one, theoretical capacity. Other name for that? No. Theoretical capacity. What is the other name? Installed capacity. Okay, rated capacity. One more name. Maximum capacity. Okay, done. Coming on to the next one. What is the next one we had? Practical capacity, or we can also call it as operating capacity. Words are important. Words are important. Or net capacity. Available capacity. Are you able to get me? Right. After that, we have something called normal capacity. That is the real capacity, which is production achieved in reality. Okay. Then we have something called actual capacity. What you have done in this month. Normal is nothing but, see, here also people get confused. So this is also real, this is also real, sir. Correct, sir. This is standard real. This is real. For example, if you're writing exams since last 6 months, then normally lectures will say, sir, this is a 90 mark student, sir. You say 90 mark student. That is the normal range of that particular student. But this exam, he has got 70 marks. That is the actual capacity. This exam also he could have got 90 marks. Still that is actual capacity only. So what is the reality as of now is actual. What is expected out of him based on his past is normal. You have to understand the concepts here. Otherwise, you have another choice. What is the other choice? Ratta Mara Jindabad. You by heart it, game over. Anyway, that option is always there. Got the point? We Mokku fellows. Clear? Concept is clear. So last 6 months the student is getting 90 marks. That is the normal capacity of that particular student. Today's exam, how much he has got is nothing but actual capacity. Got the point? Then we anyway have something called ideal capacity. Now in ideal capacity we have two things. One is unavoidable, other one is avoidable. You got it? Avoidable means abnormal. Unavoidable means what, Nana? Normal. Correct? Now tell me, unavoidable reason means what? It is the difference between, here I have written unavoidable means what? Tell me, is it normal or abnormal? Unavoidable means it is normal, which means you can never avoid it, which means it is normal. It is expected to happen, right? So that is nothing but this one, normal ideal capacity, which is difference between what and what? Installed capacity as well as what, Nana? Normal capacity. Got it? The rated capacity is, say, for example, 50,000 units. I told you this already. Normal achievable capacity is 30,000 units, right? The difference between these two is normal ideal capacity, which means since last 6 months or last 1 year, this is what you have achieved. You got the point? Which means the difference between this and this is expected to happen. When it is expected to happen, we call it as what? Normal ideal capacity. You got it? Which is expected to happen. The same thing is also called as unavoidable reason, because you can't avoid it. It is expected to happen. You can't avoid it. Get the point? Don't get confused. Again, I'm telling you. Normal ideal capacity is nothing but unavoidable reason. That is expected to happen. So when you get confused, what you have to do is just start thinking. Normal ideal capacity. Normal means what? Usually this is what happens. Usually this is what happens means it is not avoidable. You can't avoid it because this is what happens. When I say this is what happens, you can't avoid it. You get it? Right. Next. The difference between normal and actual, yes, you can avoid. Because normal is what, see, I say 90 marks student, he is expected to get 90 marks. But when he gets 70 marks, he can avoid the 20 marks. Now, probably he would have studied, if at all he has studied the way he has studied last 6 months, he could have got the same 90 marks which is expected out of him, which is normal capacity, correct? But he has got 70 marks means, what will be my answer? You are able to get 90 marks, but you have got 70 marks, probably you did not study well. So is it avoidable? That 20 marks difference? That's why it is called abnormal loss of marks. That 20 marks. You understand the point? That is called abnormal loss of marks or abnormal ideal capacity in this case, which is the difference between normal and actual. You got it? So try to remember the examples that I've told you, then only you'll not get confused. Otherwise, you'll get confused. Otherwise, you have to ratta maro chindabad. You got it? By hearting is not the option. Is that clear? Any doubts before I go to the next concept? That's all. Concepts are done. The only next concept that we have got is miscellaneous. Clear? Any doubts with respect to this one? This is clear? Right. Once you see notes means again, no problem. It will be revised for you. So not a problem. Now, come here, come here, come here. All the major concepts are done. So what we have right now is miscellaneous. We'll cover this miscellaneous and then we'll go on to problems. After this miscellaneous, I'll give you a break. Okay. After break, we'll start solving sums. Anyways, now see here. What is the heading that I gave you? Treatment of certain items in costing. One by one, we'll learn. First one is what, right? Interest and financing charges are very simple. Interest means what? You already know. It includes any payment in the nature of interest for use of what? Non-equity funds. Because in equity funds, you will not have interest, na. Very simple. Equity funds means what, Ray? Equity. Equity means what? Your retained earnings is also equity, Mukku. Your own money only, na? Retained earnings means. What is retained earnings? Your profit only will go to retained earnings in balance sheet, correct? Hello, so your profit which goes to balance sheet in the form of retained earnings plus your equity share capital is called as what? Equity. Are you able to understand? On that you will not pay interest, na. What? You will pay interest on what? You will pay interest on what? Loan, right? Your debt. The word is debt, on debt funds, right? That's all. Non-equity funds means basically debt funds. On debt funds, you'll pay interest. So interest on borrowings, even sometimes cash discount allowed to customers. Now this is tricky. Cash discount allowed to customers. Why it is coming on interest? Interest on borrowings, very easy, simple, straightforward, you can understand. What about this one? Cash discount allowed to customers. Eh? That is also interest only. How? Okay, here you can think from two perspectives. One is think from customer perspective. Customer has got two choices. Choice number one, what he will do? He will pay after 3 months, full amount. Right? Correct? Or he will pay today itself. Because I'm paying today itself, we as a company, we are expecting the money to come after 3 months. But we are getting it today itself. That is nothing but we call cash payment. And because we are getting it today itself, it means we can save interest for the next 3 months. Na? That interest only we are giving it as cash discount. In other words, cash discount, we should see it as interest. Purinjo. Cash discount is nothing but interest. Are you able to get me? Cash discount is nothing but interest. Right? That interest only we are giving it as cash discount. That is the real logic. That is the reason he is giving you cash discount. You understand the point? That is the reason he is giving you cash discount. Otherwise, he has to pay interest. I am doing business, Nana. Suppose, let's say you are buying this phone from me. Okay? Right? I sold this phone to you. I gave you two options. After 3 months, you pay, the actual price of the phone is 1 lakh. After 3 months means you pay what? 1,10,000. That's what I'm saying. Today, if you pay, say for example, I'll give it to you at 98,000 itself. What is the difference of the 12,000? If at all you don't pay today, you pay after 3 months, then I'll get money after 3 months only, na? Then this 3 months, how will I do my business? I need to get money from outside and pay interest on that. Correct? Now, if you say, so I'm planning that, okay, this fellow will give me after 3 months only. Then after 3 months, I'll get 1,10,000 for what I've sold. Today, I'm not getting 1,10,000. Na? So what will I do for these 3 months? I'll get working capital from the bank. And for that working capital, I need to pay interest. So I'm thinking, okay, I have to pay interest. All those things have been calculated and finally the selling price has been set as 1,10,000 for you. You understand the point? Now you say suddenly, no, I'll pay today itself. Then what I'll be thinking, okay, which means I need not take loan from bank. which means I need not pay interest. If at all I would have taken loan from bank, I would have paid this much of interest. Okay, the interest comes to around 12,000. Okay, 12,000 discount for you. You understand that? How discount gets calculated? Yes? You get it? Bol rahe? That is the logic behind this sentence. Many people don't understand this. That is the problem. The problem is with respect to the thought process. I'm not even talking about students. Faculties also, they don't understand. They say they escape saying that I say is wrong. Some they say not important. Go to the next one. Chalo, you got it? Anyway, moving on. This one is clear, right? This one is also clear. Next one is finance charges in case of finance lease, right? Finance lease means what? See, accounts is done, na? Tell me, what is finance lease and operating lease? Hey. Done means you would have listened at least once now. Okay, right. Anyway, leave it aside. Finance lease means you need to understand it's as if it is sale. Only the name is lease, but in reality it is sale. You got the point? It's as if it is sale. All those concepts you keep it aside. Okay, I'm telling you in simplified terms. So it is like lease. The name is lease, but actually it is what? What is the substance? It's a sale. Got the point? It's a sale, right? So even in that case also, the logic works the same, as if the sale has happened. So whatever the charges that you charge it along with interest. Get the point? Yes, right. So here cash discount allowed to customers means, in this case, you have actually made a sale, correct? And on that sale, you are giving cash discount because that guy is paying you today itself instead of after 3 months, correct? And because he pays today, I will save interest. And because I save interest, that interest savings is given as discount, correct? Same happens here also, only the name is different. Finance lease means that is also sale. That is also sale. You got the point? The name is different. The name is different. You got the point? It is also sale only. Got it? So which means again finance charges means I'm talking about interest only. Same logic as this one. So try to always remove the wheel. In law you would have studied, na? Lift the wheel. You lift that wheel, you lift that curtain, you see the substance. Then you will understand that it is also a normal sale. Got the point? Yes? Everybody? Alright, moving on to next one. What is the next one you have got? Depreciation. Okay, depreciation, we know the logic. It's a diminution of the intrinsic value of the asset due to use or lapse of time, right? So you buy an asset, you use it for your business, and you know that asset will not come for infinite amount of time, correct? Hey, Mokuphilus. What will happen after 5 years or 10 years? The asset will become zero. Then we have to buy another asset to continue the business, correct? So for that, what we'll do? Today itself, you'll start thinking that the asset life is 5 years. After 5 years, the asset will become zero, which means after 5 years, I need to buy another asset, which means this 5 years from today itself, I have to keep money aside to buy another asset. Correct? So what I'll do, suppose asset value is 1 lakh. Life is 10 years, say for example. After 10 years, I need to buy another asset. Correct? So what I'll do, from today itself, every year I'll keep how much asset? 10,000, 10,000, 10,000, 10,000, 10,000 for 10 years. From my profit. Correct? Hello? So that's why you take something called depreciation. You will debit that in your P&L account. Yes. So it is not real expenditure for you. It's a fake expenditure. It's a non-cash expenditure because cash is not going out. In reality, it's a fake book entry. You are keeping your money aside to buy asset after 10 years. Correct? All right. Moving on to next one. What is the next one you've got? Packing expenses. This is a little bit important. Now listen carefully. In packing, there are two types of packing for you. Primary packing, secondary packing. For example, suppose you buy 100 Dairy Milk chocolates. What the vendor will do? You go to a supermarket, you say, I need 100 Dairy Milk chocolates. He'll say, take this 100. Like this he'll give. He will not give you like that. What he will do? He'll pack it in a box. Correct? let's say 2 boxes, and he'll give those chocolates to you, correct? Now, what are those boxes? Secondary packing. They are called secondary packing, right? Now, the same shop you go and you ask for a milk, and he gives you milk in the form of a packet. Now, what is that? That's primary packing, because without that packing, there is no question of milk there. You can't transport it. That's primary packing. So what you have to understand is primary packing is something that is inevitable. You can't avoid it to sell the product. Secondary packing is only for selling and distribution purpose. Once the distribution is done, there is no need of that secondary packing. So your chocolates comes from the manufacturer or from the distributor to the more supermarket or whatever the supermarket is in the form of secondary packing. But once it has come to your supermarket, the secondary packing is done and it is sold individually without that secondary packing, correct? But still primary packing is important. It is still sold with primary packing, correct? Which is necessary for the substance of that particular product. Otherwise, the product will not survive. Chocolate will survive without the primary packing, that wrap. All the insects, that this, everything will come, isn't it? Sometimes with the wrap also it will be there. Then it becomes non-veg chocolate. That's a different thing. Kya re, Nana? Have you eaten non-veg chocolate, Nana? No? Interesting. You go to China, you'll get lots of non-veg chocolates. Done? Right. Okay, now see, primary packing forms part of production cost. Very, very, very important. In case of milk packets, that whatever the sealing that you're doing, that packing of the milk packet, the packing of the chocolate, individual chocolate, it forms part of production cost. Very important. Arey bol nahi yaar. Concentrate here. Parking, facilitating transportation should form part of distribution cost. The cartons, we call it as cartons, correct? That dabbas, remokus, dabbas. What dabbas? Big dabbas. What big dabbas? Cardboard only, right? We call it as dabba. Okay. Sometimes, yeah, in case of motorcycles and all, it will be called as wooden boxes. They'll take wood and there will be steel also. With that, the motorcycle will be packed inside. It's like a cage. And then motorcycle will be imported. My motorcycle has come that way only. I went to the unboxing. Yeah, it came from US now. So, I'm explaining the concept here. Okay. See, this is what the mokku punch they'll say, and because of that, I don't know whether to laugh or. Okay. Actually, we should have strong nerves to teach this kind of mokkus. Chalo, anyways. So, okay, Nana, we'll write this sentence behind autos, Nana, in Amirpet, okay? Right. Now, see. So, if they have to transport the motorcycle from US and to here, okay, what they have to do is that if somebody is buying in the US itself, then straight away they'll sell. But because the transport has to come pretty neat over here, what they'll do, they'll pack it in a cage, which consists of steel, iron, as well as wood. My unboxing for my motorcycle, it was like that only. It came in a carton. I opened the carton. There is a lot of wood as well as steel. They have to remove the nuts and bolts and all the side mirrors and stuff like that. It will not be attached to the motorcycle. It will come as separate parts as well. And then they will attach, they'll do all the PDA checks, and then the motorcycle was delivered to me. Got the point? So this again is a secondary packing only, because that packing is not necessary for the survival of the motorcycle. You understand the point? That packing was necessary only to sell the motorcycle. Always understand the purpose. Is that packing is necessary to survive for the survival of the motorcycle? How will I drive the motorcycle with that packing, Ray? I can't ride it. So it is not important for survival of the motorcycle. It is important only for the selling of the motorcycle, only for the selling part. Then it becomes secondary packing. You got the point? The milk packet, whatever the packing that you're getting, is not survival. It's survival for the product itself. Without that packing, you can't sell the product, you can't consume the product. So therefore, it is primary packing. Then it becomes part of production cost. In my example, the motorcycle packing becomes part of distribution cost. The cardboard boxes, the wooden boxes, which I've told you, becomes part of distribution cost. Got it? Special packing at the request of customer should be charged to specific job. That is also there. Are you able to get me? For example, a particular product comes in a particular packaging. Okay. Now for me, say for example, our cousin sister is there. Cousin sister birthday is happening. Okay. Then I say for example, I'm gifting her a scooty. Okay, I say that normal packaging is not enough. I want it in a very unique packaging and stuff like that. I have to gift scooty and stuff like that. So what they've done, they have packed in a certain way and they are landing it with the help of a helicopter and stuff like that. On account of her birthday, it comes in a helicopter and then it lands the scooty and then it all something happens and then no, scooty is not gone. Scooty is not gone. Scooty is surviving, right? That 4 doors will be there, na? It will open, damal, like that. Then the scooty comes out. Okay, now tell me, this entire cost of packaging right now, including the helicopter expense, will be charged to whom? To the customer for the specific order. Got it? Done. Moving on to next one. What is the next one we have? Fringe benefits. Okay, right. Now see, what is fringe benefit? Taxes is done, right? Tell me. Ada pavi. Hey, don't do comedy over here. Array, at least 100,000 times that word will be used in taxes, Ray. Huh? They would have taught, you would have forgotten. Salary chapter you'll get. Okay, Nana. I studied almost 12, 13 years back. I still remember. Right. Anyways, in salaries chapter, you'll get something called fringe benefits. So what is fringe benefits? Additional payments provided to workers apart from their salary. This is the problem if you always remember one name. Okay. Say for example, if I pay overtime holiday, pension facilities, all these are called what, Nana? Fringe benefits. When you pay pension, when you pay even on their holiday, LTC leave, like that, people will say, all these are called fringe benefits, up and above what you are paying besides your salary. Okay. They improve the employee morale and loyalty towards the organization, obviously. Okay, you can call it as perks or perquisites or whatever it is. Fringe benefits means actually this is the meaning. Okay, right. They basically improve the employee morale. Obviously, employee will be happy, isn't it? Obvious, right? And the important thing for our costing point of view is it forms part of production overheads. That is what you have to remember. It forms part of production overheads. Now, moving on to next one. Expenditure on removal and re-erection of machines. So what do you mean by this? Huh? Machines, Nana, machines. Yeah. Okay. Now see. First question is, you might be asking, sir, why do we need to remove the machines and then re-erect it at some other place? You got the point? So machines are not like this Moku machine, like this camera. It's very easy. What is there, sir? Remove some screws and then take it and then keep it. We are talking about big machines. So when you are constructing your house, you need a solid foundation before you can construct a house, isn't it? Like that, these machines will run in acres. You have seen this manufacturing, Nanana, this Coke manufacturing and stuff like that. What kind of big machines are there? Your entire process will go, that bottles will come and then it gets filled up, isn't it? And instead of concentrating on the bottles, if you'd have concentrated everything else, you will see a machine. Big machine. The size of it, if you see, it will be more than a mall. You get it? It will cost you 50 crores, 100 crores and stuff like that to construct them. So when we have to move it, you know how difficult it's gonna be, isn't it? Right? Yeah, that's what we are talking about. Now the next question will be, our Mokku fellow will ask, sir, why should you move it, sir? Big machine, sir, keep it like that, sir. There are reasons for that. If there is a change in method of production, you have to move it. If there is change in flow of production also, you have to move it. Flow of production. Say for example, department 1, department 2, department 3. Something has changed, your product has got changed, and therefore earlier it used to be first the raw metal will come to department 1. From there it goes to department 2. From there it goes to department 3. Then it becomes finished good. Now your product has got changed. So therefore now the raw metal comes to department 2 first. From there it goes to department 1. From there it goes to department 3. Flow is changed. Then obviously what you have to do, you have to change the machines, because department 2 is far away. Department 1 is near to the materials stores department. Now every time you can't take it to department 2 now first. Earlier department 1 was first. Therefore I've kept it near to the stores department. Now the process has got changed now. Your flow of production. Now what I have to do, take the machine from department 2, get it to department 1, re-erect it over here, take the machine from department 1, go to department 2, re-erect it over there. You got it? So now again the process will start happening. Got it? Kya that is treated as production overheads. This is important. Keep that in mind. If the above is due to normal planning, that is, this is normal, then it is treated as production overheads. If it is due to faulty planning, then it will be charged to costing P&L account. Okay. Say for example, our Mokku is there. What's her name? I forgot. Hasita, right? Hasita is there. Okay. Hasita has passed chartered accountancy, qualified CA. How she has passed, we don't know, but she has passed eventually. Let's say there is another company like ITC manufacturing. Okay, it's there near Hosur. Okay, and our what's your name, buddy? Karthik is the manufacturing head over there, right? And he has recruited Hasita. Okay, Hasita don't know anything about costing, but she has joined. Impressed you in the interview. Okay, this Mokku fellow has taken her. Now Hasita comes inside, sees the manufacturing process. She says, this machine, keep it there. This machine, you keep it there. This machine doesn't look nice. You color it in pink and then keep that machine over here. What, Nana? Right? Something she has changed. And now what has happened? Our cousin sister is coming. Okay, cousin sister is saying, hey, what is happening? She is an engineer, actually. She knows how the manufacturing process happens. Hey, if you do like this, it will not happen. It will not work like this. Like that she is saying. Who changed all this? Means then our great Hasita has changed. Then she say, why did you change me? She says, it doesn't look, now it is aesthetically beautiful. Na? Like that she'll say. You got it? Correct only, na? Then she says, ayo, like that she will say. And then she will change the whole thing. And because of that, again, you are re-erecting and erecting the machines, and it has costed lots of things. If I were to be the chairman of that particular company, I will say, put it in the account of Karthik. Okay. But I am not the chairman. Some good chairman is there. So what he will do? He will say, okay, put it in costing P&L account because it is due to faulty planning. Got it? You got it? Yep. Right. Moving on to next one. What is the next one you've got? Bad debts. Now, there are two views with respect to bad debts. What is that? We'll see later. Right now, what you have to understand is it can be treated as a part of finance cost. It can be treated as a part of selling and distribution overheads as well. It depends upon the facts of the question. Are you able to get me? Usually, this is the treatment that you will give. You will debit it in P&L account only, na? Usually, bad debts means we'll debit it in P&L account only. Correct. Sometimes what happens, it can be part of selling and distribution overheads also. Are you able to get me? How, sir? Very simple. There is a real life example which I can tell you, but it is rather complicated. But anyway, I'll give you the gist. You know that 2009 recession has happened in US, correct? Why the recession has happened? Because of bad debts. What bad debts? Bad debts with respect to the loans that is given to the houses. So basically what happens is that you have lots of rich people in lots of countries like China, Gulf and all that. These rich people, they've got huge amounts of money. So they don't want to keep that money idle. They need at least some sort of a return from that money. So they'll look at safe bets. At that time, the safe bet was US. They were getting like 1%, 2%. Most of the countries, they will invest in some other countries. Usually they'll expect 2%, 3% like that. At that time, there was a major change in finance planning has happened. What is that? I don't want to get into details in US. And because of that, what happened? These banks and financial institution in US has taken the money from these guys, and usually they were expecting 1 or 2%. They started giving them double, like 4%, 3%, 3.5%. And these guys were suddenly they were looking at double the money, in form of return. So they got greedy, and they started putting pressure on the financial institutions of US, saying that I need more. I need more in the sense I'll give you more money, more money, more money. You give me like this, double the return than what usually we get. So all these financial institutions and banks were flooded with inflow of money. They don't know what to do. So what they've done, let's say our Karthik is walking on the road. The bank, what they've done, hey Karthik, please come here. Do you have house? They said, no, I don't have house. Why? I don't have money. Don't worry, we'll give you money. You buy a house. So irrespective of his status, irrespective of whether he'll be able to pay or not, nothing was taken into consideration, have started giving loans. Like Karthik, so many people have gave what? House loans. And first 6 months or 8 months you will pay. That interest was given as a return to them. Right? They were happy, everybody was happy. Slowly what has happened? Karthik started defaulting. Like Karthik, so many other people have started defaulting because they don't have ability to pay. And once you default, naturally what will happen? I'll take your house because that's a collateral. I given house loan only, na. So once I start taking house, then what bank will do? Bank will not sit in the house, na. It will keep it for sale. Like you, hundreds and thousands of Kartiks are defaulting, then everybody's house will be taken. Then everybody's house will be kept for sale. So all of a sudden, lakhs of houses were available for sale in the market. Naturally, what will happen? The value of the house? Damal. Everything collapsed. You got the point? So here, it's a bad debt. But here, it's a bad debt because of increase in sales. Then it comes under selling and distribution overheads. You understand the point? So if you are incurring bad debt because of your greediness to increase the sales by selling it to a person who is not eligible to pay, then that bad debt also becomes part of selling expenses, selling and distribution overheads. You get the point? Did you understand what I'm trying to say? Got it? All right. Many people don't understand this. Usually, when I say bad debts, they'll always think it forms part of finance cost where it will be debited in costing P&L account or P&L account, whatever it is. Correct? But because of these exceptional cases, it will be part of selling and distribution overheads. Extraordinary bad debt should not be included. That's okay. Extraordinary bad debts means rarely it will happen. Rarely it will happen. Okay, right. Anyways, moving on to next one. What is the next one you have got? Training expenses. Obviously, it is part of production cost. Naturally, training will be given to whom? Employees only. Correct? Hello. Right. But sometimes there will be high labor turnover. Now, what do you mean by labor turnover? Labor turnover means rate of change of labor. When I say high labor turnover, it means more number of people are leaving your company and more number of people are coming inside the company. Are you able to understand? That's not good. That's not good. That's not a good sign. We'll see it in labor chapter in detail. Right now, that much of information is enough for you. So high labor turnover means lots of people are leaving your company, lots of people are coming inside the company. So because of that, what will happen? Your training expenses will be very high. Why? Again and again, again and again, again and again, you have to train new people. Because if labor turnover is not there, same people will be there. If you train once, that's enough. They'll be doing job in your company for years together, correct? But that's not the case here. People are leaving your company, then new people are coming, correct? Again, you have to train them. Again, whoever has got trained, they're leaving the company. Again, you are recruiting. Again, you have to train them. So which means your training expenses will be abnormally high. In this kind of situation, this will not go to cost of production. This will form part of costing P&L account. That is the logic. Usually, normally, training expenses will form part of cost of production only. But in exceptional cases where there is high labor turnover, it will not form part of cost of production. It will form part of costing P&L account. Abnormal cases. That's, we know na, the moment you see something abnormal, it will go to what? Costing P&L only. We know the logic, right? Kya re? Right, moving on to next one. Next one is what, Nana? Canteen expenses. Subsidy or running expenses should be treated as production overheads. Canteen means obviously it will be run at subsidy only, na? Whatever that is available on the outside will be available at a lesser price in canteen, or most of the companies it will be free. It will be free means why you are providing it free? It's like a benefit you are giving to the employee. So definitely it should form part of your production overheads normally. Got it? Yes. Now, the next question is, who are using your canteen? Okay. Is it only factory workers, or is it factory and administration workers who are using your canteen? If only factory workers are using, they're eating in your canteen, then give that expense to the department based on number of workers, which means you have to allocate it based on workers only, because only workers are eating. You got the point? Kya nana? Logical only, na? If 10,000 is your canteen expenditure, there are 3 production departments, and in production departments you have workers, and only these workers are eating in your canteen. Then this 10,000 will be given to these 3 people only. These 3 production departments, correct? In the ratio of what? Number of workers. Simple. Got it? But if both factory and administration workers are eating in canteen, then a portion will go to factory overheads, a portion will go to administration overheads. Pretty simple. Got it? If only factory workers are eating, everything will go to factory overheads. Here I'll write. Only to, which one, Ray? Factory overheads. Because only workers are eating. Workers are inside the factory. Got the point? If both factory workers as well as administration workers are eating, then some portion will go to factory overheads, some portion will go to administration overheads. Pretty simple. Got it? If selling guys are also eating, then it will go to selling and distribution overheads also. Simple. Got it? Everybody? Right. Fantastic. Suppose you are doing some welfare activities, it will go to general overheads. Welfare activities. Okay? Right. Moving on to next one. What is the next one you have got? Night shift allowance. Okay. This is normally treated as what, Nana? Production overheads. Night shift means what? Normally your factory is working, that's all. Instead of day, it is working in night, that's all. Are you able to understand? But if it is due to specific customer order, then it will be charged directly to the customer. You got it? Simple logic, right? Because usually I'll not work at nights. But because customer has demanded, I'm requesting my employees to work. In that case, what will happen? I have to pay them more. Then that will be charged to the customer. That's all. Simple. Got it? If night shift is run due to abnormal situations, then it will be charged to, exactly. Say for example, you take the abnormal example, our Hasita example only. Hasita has come, recruited by the company. She has looked at the aesthetical appeal of the machines. She did not like it. So she changed the painting. She changed the machines. You got the point? Karen, Anna. Yeah. Because of that, what happened? The machines became damal. And because of that, what happened? You are not able to deliver the products to your customer in a normal time. And as a result, cousin sister has got shocked. And cousin sister has started talking to the management, and finally they have decided that, okay, we need to work during the night shifts also. We need to work overtime. Otherwise, we'll not be able to deliver to the customer. He's an important customer. If we lose that customer, we lose half of our business. Got it? Now, you are making your workers work night times and you're paying them more. And that now will go to which account? Casting P&L account only. It will not form part of production overheads because this is due to abnormal situation created by an abnormal girl. What, Nana? You get it? You got it? Yes, that's all, right? See, cousin sister is very happy. Hey, they are also giving proof now. They're saying exactly that's what you will do. Right. Anyways, are we done with this? Now let's move on. So what is the concept you need to understand? See, if you see all these concepts, the rule is basically same. Whenever it is normal, it will go to overheads account. If it is abnormal, it will go to costing pen account. That's all. Okay, last one. What is this R&D? Research and development expenses. Normally, R&D is a cost of a product. It will be charged directly to the product. If it is general research expenses, it will go to general overheads. If the amount is substantial, then it might be treated as deferred revenue expenses. What do you mean by that? Why are you doing R&D first of all? To develop a product or to create a product, correct? So the more you spend your money on R&D, it will come in the form of better sales only na, for you. Are you able to understand? For example, you take foldable phones in Samsung. When compared to this Mukku Apple fellow, he would have spent a lot of money on R&D. Therefore, he has got this foldable technology and it is working out, correct? Then that extra amount which he has done, which he has put into R&D, is actually creating more sales for him because it has created a more additional product, additional sales, additional customer base, correct? Are you able to understand? So which means in one way, it is creating an asset only, na? An intangible asset. Are you able to understand? Indirectly. It should be treated that way only because it's going to give me benefits in future also, na? Are you able to understand? That is why it will be treated as deferred revenue expenditure. Are you able to understand? What do you mean by deferred revenue expenditure? Deferred means what? You are postponing that expenditure. Are you able to understand? Say, for example, you have 10 lakhs of expenditure. You will not debit 10 lakhs today itself in this year's P&L account. In that 10 lakhs, you will slowly amortize like 10,000 next year, or let's say 10 lakhs na 50,000 this year, next year 50,000, next year 50,000, next year 50,000, next year 50,000. Are you able to understand? It depending upon the life of that particular product. Got it? You know the concept, na? That is the concept. Deferred revenue expenditure means that is the concept. You will not put the entire expenditure this year itself. Over a period of time, slowly some amount you will put in P&L account. You will debit. Got it? Yes, right. That's it. With this, we are done with what? All the concepts. Concepts are done. Okay. We are done with all the illustration sums also. Illustration sums also finished. Okay. Now you take a break, and after a break, we will start solving sums. Okay. Questions. Chalo.